All right, good morning, folks. I wanted to give you guys a quick market overview prior to my weekend recap, overall weekend recap. I want to give you guys a quick market overview as we approach the end of the weekend. The end of the week. Today is Thursday, August 26th, and it's now 6:22 a.m. And I wanted to do this prior to the Fed speak on the next 2 days at the Jackson Hole Symposium. So, and this is one of the main reasons I want to do this. Just make sure you guys are still prepared and still paying attention to action within the market and things that are moving that are giving us some, advanced warning or some advanced signals as to what could be the next move within our markets, so that you're always prepared. All right, I'm looking at a one-year daily chart of the S&P right now. And one thing I'll point out is that every time there was a catalyst that caused a pullback in the market, throughout the course of this year, you'll see, and this is the 50-day moving average that I have here, almost every time we have had a pullback, some type of catalyst caused a pullback, we got a bounce right at the 50-day moving average. So we'll see one here back in March. Pull back to the 50-day, got a nice bounce. And then we pull back to the 50-day right around May. We got a nice bounce again. Then we pull back to the 50-day in June, another nice bounce. And each time we get these bounces, we've been seeing new high after new high after new high within the market. In July, here's another one. Nice bounce off the 50-day, march up to new highs. And then here recently, up to new highs, several new highs throughout the course of this year, and just keep creating new high after new high after new high. And here we are around August the 16th, pull back towards the 50-day, another bounce around August the 19th, and another rally after last week, back up to new highs again. Back up to hover around new highs. And every time we start to hover around these new highs, we want to get some type of pullback. The question that I'm really watching and really have right now is, if we get another pullback to the 50-day, will we get that bounce as normal? Now that I pointed that out on the S&P 500, let's take a look again at the S&P 500 monthly chart. And as you can see, here's a monthly chart over the past 40 years or so. We are still seeing this big needle nose action away from the moving average. So the market is ever so just inching and creeping higher, not making any huge strides higher, but creeping higher, with the big divergence from the 50-day moving average on the monthly chart. So that's something that people pay attention to. That for the longest, we've just been in a straight arrow up on the S&P. Now let's take a look at a couple of other indices and show you what they're doing. Okay, and here's your one-year daily chart of the Dow Jones, and same type of scenario. Pull back to 50-day moving average. Have one back here in the early part of January of this year, and we rallied right after we got that pullback. Then again, around February, pulled back to the 50-day moving average, and we rallied to new highs. Here in March, we pulled back, not quite to the 50-day, but still again rallied to new highs. And then a move up again, creating new highs along the way, all the way up until May of this year. Then we pulled back again to the 50-day, rallied again just a little bit, and then we really pulled back here around the end of May towards June. Dropped just below the 50-day, but also act as an area of support again. And we got that move higher. And then we pulled back again here. And then we jumped again higher, August to now. Another bounce off of the 50-day moving average from here. So this recent bounce off the 50-day moving average was within the past week. And what I'll point out here is that, unlike the S&P, the Dow has not yet rallied back to all-time highs again after a bounce from the 50-day. So that also makes you want to wonder, start you to wonder, will it be able to do the same thing that the S&P had just done, rally back again to all-time highs? Or will it soon join another major indice that I'm going to show you here in a second to start to falter and stop creating these new highs? We'll see. But there's a catalyst coming up. That's the reason why I want to do this morning. There's the Fed Symposium. That's the next 2 days, today and tomorrow. So there's something to pay close attention to, because this could be a turning point for our markets at this point. So we have to pay close attention to that. Now let's again look at the monthly chart. The Dow, and you'll see the same type of scenario. We have been in a straight line up since the pullback from the 2020 pandemic lows, and straight point up. And looking at the NASDAQ monthly chart, starting off with that one, same type of scenario. Since the pandemic low, bounced off the 50-day moving average on the monthly, and we went straight up. And we still have a huge divergence from the moving average and price action, heading into another catalyst event, which is the Fed Symposium Thursday and Friday this weekend. Something to pay close attention to. Now, if I take this back to a yearly daily chart, you'll also see same type of scenario as the others. Bounces off of the 50-day moving average back here. This is back in September last year. We hit it again here in October. Nice bounce. Hit it again in January of this year. Pull back, nice bounce. And again, like I said, the NASDAQ, in January of this year, we pulled back to the 50-day, got a bounce. And then another one in March and another bounce. From that point, we hovered around the 50-day after the NASDAQ hit that drop below it in March of this year. We kind of like stayed stagnant for almost 2 months. And then the end of March, beginning of April, NASDAQ got another nice bounce. Almost to new highs. And then we got a pullback again in May. Yeah, in the end of April. Again in the May, pullback, dropped just below the 50-day again. And then another nice rally to new highs from end of May up into July. Then we tested the 50-day again. Another bounce from there. And tested the full 50-day again around August, let's say right around August 19th. And then we got a huge rally off of the 50-day moving average. And now we are hovering around the highs. Again, going into a catalyst event, which is the Jackson Hole Symposium, which will be taking place the next 2 days, with the Fed's Federal Chair Jerome Powell speaking on Friday afternoon. So something to pay close attention to. Markets could continue to hover around these highs going into the weekend, and then if that was to happen, anything is possible come Sunday when the futures open back up. So just position yourselves accordingly. So that is the NASDAQ. Again, hovering around all-time highs with the catalyst event coming up. Now we'll take a look at the small caps index, because the small cap index, I like to always pay attention to this, because I tell people who I run across who always ask questions about market actions, they pay attention to the small cap index, because sometimes it can act as an early indication of overall market action. Now I say that because if you look at the small caps index, the Russell 2000, it created a high back in March of this year. Okay, keep that in mind. Now, I just showed you all the other indices that how they've been acting nicely since they've been bouncing off of the 50-day moving average. They've been creating these new highs throughout the course of this year. That hasn't been so for the small caps. So the small caps created its high from the pandemic low. This highest high it has gotten to since then. It happened back in March of this year, and it has not revisited new highs yet, folks. Okay, so in February of this year, we pulled back to the 50-day moving average, got a nice bounce to new highs. Then we pulled back to the 50-day moving average just below it, and dropped down to as low as about around 2113. 2113 is where it dropped to. All right, so reached that all-time high back in March, pulled right back to the 50-day and dropped just below it, hit a trend level, a trend line that I've been monitoring all this year. It's around 2113, around 2110. This trend line is where price action is pulled down to since hitting that high, pulled back to since hitting that high back in March. So every time we got a bounce here, instead of marching up to all-time highs, we would march just above the 50-day moving average, and then we would get a pull back just to and just possibly below the 50-day moving average, right back to that trend line. So this trend line has been tested since the early part of March of this year. But every time we've gotten a bounce from that level, we have not created new highs. Another bounce here in June, almost just about creating a new high right around June. And we pulled back to the 50-day, got another bounce, not creating new highs. Then we really pulled back just below the 50-day moving average again. Where to? To this trend line again, right around that 2113 level, around 2113, 2110. And then this happens. We get a move higher up to the 50-day moving average. And look what happens now. Since we are rolled below the 50-day moving average this time, the 50-day has been acting as an area of resistance. So we got a nice bounce early part of July up to the 50-day, and we hovered just below the 50-day for almost a month. Got just above it just a little bit around the beginning of August, and then we pulled back sharply several days, multiple days in a row, back down to that trend line again. And now this is around August 19th again. We got a nice little rally over the past several days. Where to? Back up to the 50-day moving average, folks. So that's something to pay very close attention to. That even though the other indices have been creating these new highs, the Russell 2000 has been putting in lower highs throughout the course of the year. And we're right back at the 50-day. And this is my speculation that this weekend we could see the Russell fail this 50-day and get a move lower. If it does not hold this 2110 level, 2113 level, this week we can see this continue to fall and really start to see an acceleration below this trend line. If we drop below this trend line, folks, if we pull back from this 50-day and can't break above this 50-day in a major way and create new highs, instead get a pullback and drop below this trend line, I would say that we can probably start to see the other markets start to drop below their 50 and start to react or start to act the same way as the Russell has been acting over the past several months, course of this year. So there's something to pay close attention to. I wanted to point that out. And here's one more thing to consider, folks. One more thing to consider is looking at this this tool that I like to use, which is the S&P 500 stocks. That it's a percentage of S&P 500 stocks trading above their 200-day moving average. I like to point this out because even though some of our indices have been creating these new highs, this tracks the percentage of S&P 500 stocks trading above their 200-day moving average, and I've added a 50-day moving average line on this percentage chart. And as you can see, even though you've seen those new highs, this is divergent from the overall markets. Even though you see those new highs in the Nasdaq, the S&P, and the Dow, this tool has been showing that the percentages of S&P 500 stocks participating in moves above their 200-day moving average has been dwindling, folks. Look how the 50-day moving average is now acting as a level of resistance for this particular tool. The percentages, I'm not able to get back to that 97%. That's almost 100% of S&P 500 stocks above that 200-day moving average. Since April, since then, we had a lot more stocks that have been dropping and staying below their 200-day moving average. That's something to pay attention to underneath the surface. So that means there's a minimal amount of stocks that are keeping this market propped up, and we're starting to have less and less participation from stocks. So when you start to see that, the momentum, that means the momentum in the overall market is dying out, and nobody's really talking about this, but the momentum is dying out, and it's been dying out since the beginning of April this year. And we have less and less participation in this market rally. So we got more and more stocks that are starting to trade below their 200-day moving average, and you see every time we have gotten a rally back up to this 50-day moving average, when it's indicated, we have dropped to new lows, dropped down to as low as 73% of S&P 500 stocks here recently, trading above the 50-day. Then we got a rally back up and hovering around 83. As you can see, that this 50-day has been acting as a strong area of resistance, and we have not yet seen that 97% again since April. That shows you what's going on underneath the surface that nobody's really paying attention to, that the market momentum has been losing steam since April, folks. And I'm telling you that if this continues, eventually you'll start to see a big drop in the market with a lot of stocks dropping below a lot more stocks dropping below the 200-day moving average. So you see how we got to this low back in July, which was right around 76% of stocks trading below their 200-day moving average, and we rallied real quick. And then we created a lower low back in last week, 73% stocks trading below the 50-day moving average. I mean, below the 200-day moving average. Then we bounced again. So what I'm expecting to see on probably this week or by early next week, and also keep in mind we're approaching another end of a month. There's only after tomorrow, there will be only 2 more trading days left in the month of August. And then we go into September, which is also a seasonally weak month, with this momentum dying out. So this momentum dying could really, you can start to see the real effects of this momentum dying out in September. So that's something to pay close attention to. So if we don't get a big rally in this percentage indication of stocks above that 200-day moving average, if we don't get a big rally back above this 50-day moving average, we'll probably see another low in here be created, and we'll drop probably below 70% of S&P 500 stocks trading above their 50-day moving average. If we drop below that, then that's going to bring my attention to the weekly chart. Start to pay attention to that. And as you can see, the weekly is already starting to struggle with the 50-day moving average. Okay, and then if we really drop below this 50-day on this particular tool over the next week or so, and that's going to bring my attention to the monthly chart. And as I showed you guys before, this monthly chart dates back over 20 years. And I pointed out that every time we have gotten around this 97 level or above 95 level, S&P 500 stocks trading above their 200-day moving average, we have start to see deterioration in the monthly charts as we start to approach the 50-day moving average on the monthly. And then if we break that, this is what normally happens if we break that 50-day moving average on a monthly chart of this particular tool. We see sharp moves lower, and we normally see them pretty quickly. Here's one back in last year, 2020. See that big move lower once we drop below the 50-day. Again, back here in 2011, we started moving lower faster, a lot sooner. But we got below that 50-day, it really accelerated down to a low of about 7%. Just 7% of S&P 500 stocks above their 200-day moving average. Then we had another one back here in around May of 2010, dropped below that level, got down to about 27%. And then, of course, the big one, 2007, and that lasted for a couple of years. 2007, around June, dropped below that 50-day moving average, and we stayed below it too for almost a year. Every time we tried to rally back up to it, we got rejected. And this went on for about over a year to 2009. And we finally bottomed out right around 1%, a tenth of a percent of S&P 500 stocks trading below there. Even that's probably less than a tenth of a percent, 0.01. So we dropped to that level, and then we finally got a rally. So wanted to point it out. So even though you see these new highs being created in the Dow, the S&P, NASDAQ, there's still some damage that's already been done underneath the surface. And as you can see, the momentum or the participation from stocks within the S&P have been dwindling throughout the year, which leads me to believe that we are trending lower underneath the surface, which will eventually probably affect the entire market here real soon. So that's something to pay close attention to. All right, folks, wanted to give you guys that quick snippet. Heading into the last 2 trading days of this week, and I will be back posting my schedule for this weekend for our weekly overall market review, which more than likely I'll probably be doing it on this coming Sunday, but I'll be posting that schedule sometime later today. All right, folks, have a great day.